Return on capital employed, 33. That's really good to see. That's really interesting. So this makes me actually be pretty interested in Airbnb. Hi everyone, JJ here with The Art of Value. Welcome. Well, today we're going to look at the company and stock Airbnb, which has just reported earnings. How do they go? Let's just dive straight in. So here we can see the stock price, and it's down 4% after hours after the earnings. When we look at the year to date, we can see it's up 12.15%, and over the year it's up 24.78%. And maximum going back to the IPO, it's up 8.31% only over that time. So it's had a bit of a roller coaster. So what went on for the earnings for this past quarter? Here we can see CNBC, the headline, Airbnb reports better than expected revenue and beats on guidance, yet the stock is down. Let's see if we can dig into this and look at the metrics and financials. This is actually the first time I've looked at Airbnb. So the Airbnb reported its fourth quarter results Tuesday after the bell. The company posted $2.2 billion in revenue, beating estimates, and said guest demand is strong. Airbnb gave an optimistic forecast for the first quarter. So they gave good guidance, a good optimistic forecast, yet the stock is down. There's Brian Chesky there, the co-founder and CEO. Airbnb reported better than expected revenue for the fourth quarter on Tuesday and issued an optimistic forecast for the current period. Here's how the company did. Loss per share, 55 cents. It's not immediately clear if that's comparable to the profit estimate of 62 cents. Okay, we'll have a look at that. Revenue, 2.2 billion versus 2.17 billion expected by analysts. All right, so a beat there on revenue. Revenue climbed 17% from 1.9 billion in the same quarter a year earlier. Airbnb posted adjusted earnings of 738 million in the fourth quarter. Analysts expected 645 million, so a beat there as well. Airbnb said its loss included lodging tax reserves and non-recurring tax withholding expenses of about 1 billion, so substantial there. The company also announced approval to buy back up to $6 billion of Class A common stock. They're buying back shares at this point. I mean, it has existed for quite a long time, this company, but hasn't been public for very long. Have they got the cash to do this? Why are they buying back now? It's interesting to see that. Shareholders, investors usually like to see buybacks because it's decreasing the share count as long as they're not issuing lots of shares at the same time. So that's something to dig into. It's an interesting move that they've done there. 6 billion is approved there. Of course, it's only good to have buybacks when the share price is not high. If it's too high, it's kind of a waste of money. Better to invest it somewhere else. So if they're undervalued, like Warren Buffett would only buy Berkshire Hathaway stock if the stock is trading below fair value, for instance. So that's important to note. It's good capital allocation to do that. Are they being good capital allocators here? We'll have a look at that. Airbnb said the company is at an inflection point after spending the past 3 years upgrading and adding features to its main room sharing service. Airbnb said it's investing in more under-penetrated markets abroad in 2024 and that it will share plans to expand beyond its core business later this year. Well, that'll be interesting. How's it going to expand beyond its core business? Of course, it's pretty global now. There's not many places without Airbnb. Certainly here where I am in New Zealand, we have it all over the place. They're everywhere, aren't they? I'm sure, that's important to the company, like hotels, to have them all over the place. So truly global company, really. Airbnb said revenue in the first quarter will be between 2.03 billion and 2.07 billion, while Wall Street was expecting 2.03 billion. Gross booking value, which Airbnb uses to track hosting earnings, service fees, cleaning fees, and taxes. Those cleaning fees, if you've stayed there, there's quite a lot of fees, add-on fees there, came in at 15.5 billion in the fourth quarter. The company reported 98.8 million nights and experiences booked. Wow, 98.8 million nights and experiences, up 12%. So 12% growth there. Remember that we're coming out of that pandemic period. I think a year ago it was pretty much fully opened up. in most places. So comparable to a year ago is probably okay to do that. And above the 98 million expected by analysts. Airbnb said guest demand remains strong, particularly for first-time users. Average daily rates increased 3% from a year ago to 157 in the fourth quarter, and the company ended 2023 with 7.7 million active listings, up 18% from a year earlier. So 18% growth there in listings. That's interesting too. So there's growth in pretty much all areas, which is good to see if you're an investor or a potential investor, but that's not all there is to take into account, of course. Airbnb said in the investor letter that it has seen double-digit supply growth in active listings across every region. Okay, supply growth meaning the properties they've got to rent out, while the Asia Pacific and Latin American regions grew the most. Okay, I'm in the Asia Pacific area. People have complained in the past. There was controversy about Airbnb taking rentals off local markets and going into Airbnb. So that's been a problem in quite a few countries. So I'm sure you've seen news about that in the past. So far, everything seems good, even though the share price is down. Now, if you're getting value out of this episode so far, I'd really appreciate it if you remember to hit that like button to help the algorithms to spread it to more people. Thanks. Now let's have a look at the investor presentation for this current earnings. We'll dig into that to see what we can learn from that. Key financial measures: revenue, Q4 revenue of 2.2 billion, as we saw, increased 17% and 18% for FY 2023. So it's Q4 and full year. It says the growth was driven by continued strength in travel demand as well as foreign exchange rate tailwind. So, that can fluctuate from year to year, quarter to quarter, the exchange rate. Q4 net loss of 349 million included non-recurring tax, withholding expenses and lodging tax reserves, as we saw, of approximately 1 billion. Excluding these and after applying our anticipated long-term tax rate of 21%, adjusted net income was 489 million, net loss margin of 16% and adjusted net income margin of 22%. So there's adjusted EBITDA there. Charlie Munger doesn't like these adjusted figures, never likes those, calls it BS earnings. Our fourth quarter adjusted EBITDA of 738 million represented a 46% increase from Q4 2022, demonstrating the continued strength of the business and discipline in managing our cost structure. And free cash flow, very important, the lifeblood of a business. We generated 63 million of net cash provided by operating activities and 46 million in free cash flow in Q4. FY 2023 free cash flow was 3.8 billion, representing a 39% FCF margin. Some key business metrics that we'll have a look at: gross booking value, strong growth in nights and experiences booked, and a modest increase in ADR drove 15.5 billion of GBV in Q4 2023. So that's 15%, they say, year on year, and 16% year on year for that full year. Q4 2023 nights and experiences booked increased by 12% compared to the prior year, driven by growth in all regions. So growing well in lots of areas, they say here. So let's see what we can see from the shareholder letter, see what we can glean from this that's of interest to us as potential investors or investors. Airbnb ended 2023 with another strong quarter. In Q4, nights and experiences booked totaled 99 million, growing 12% year on year. So 12% growth there, and making our highest fourth quarter ever. We'd expect that for a growing company, you'd want it to be growing, being higher for every quarter or every year in particular. So they've broken down some categories to talk about here. Making hosting mainstream. We're focused on making hosting just as popular as traveling. Okay, so they want more properties on the market, more people using Airbnb, hosting and using. And we believe our approach is working. In Q4, our host community surpassed 5 million hosts around the globe. Active listings exceeded 7.7 million, increasing by 18% with sustained double-digit supply growth across all regions. That's pretty much one way that they can expand. So expanding beyond our core, how are they going to expand this business? They say Airbnb is at an inflection point. We spent the past 3 years perfecting our core service, and now we're ready to embark on our next chapter to unlock more opportunities for growth. We're investing in underpenetrated international markets. Okay, we're now expanding our playbook to countries including Switzerland, Belgium, and the Netherlands. We also believe that now it is time for us to expand beyond our core business and reinvent Airbnb. Okay, what does this mean? Well, this will be a gradual multi-year journey. We're excited to share more about this in later 2024. They're not saying what that's going to be. So is it going to be more experience-based? That will be interesting to find out later in the year. So here's more on the repurchases. Our strong cash flow enabled us to repurchase 750 million of our Class A common stock in Q4 2023. Share repurchases during the full year 2023 totaled 2.25 billion, which is substantial, and we reduced our fully diluted share count from 694 million at the end of Q4 to 676 million. So investors like to see that decrease in the share count. Since we announced our first share repurchase program in 2022, we have repurchased a total of 3.57 billion of Class A common stock. So that's substantial already. As of the end of 2023, we had 750 million remaining under our prior program. We are announcing a new share repurchase program with authorization to purchase up to 6 billion of Class A stocks. 6 billion is substantial repurchasing for a growth company like this. Not many Silicon Valley companies are buying back shares at this point in their lives, and growth is accelerating in underpenetrated markets. We've added nearly 1.2 million active listings over the past year. International expansion. Overall lodging market is massive, and we've only scratched the surface while we're in over 220 countries and regions, which is pretty much most of the world. The levels of penetration across each vary significantly, so they're trying to go in more deeply into markets. We believe our efforts are working. While our expansion efforts will take some time and investment, we will strategically target new markets to capitalize on our current momentum. So this is an interesting graph. The shares, we repurchased 2.25 billion of shares during 2023, reducing our fully diluted share count to 676 million as of year end. And we can see there share count going down from 2021 to 2023. They've included stock-based awards and warrants outstanding here in the lighter color. So that's going down as well. So that's good to see. Investors will like to see that, decreasing the share count. So many Silicon Valley companies have a diluting incredibly. Stock-based compensation is huge, so we have to look at that, and Airbnb doesn't look to be too bad at all. Outlook 2024 started strong with more than 6 million guests welcoming the new year in Airbnb. For Q1 2024, we expect to deliver revenue of 2.03 billion to 2.07 billion, which represents year-on-year growth of 12 to 14%. So that's important. Perhaps the market was disappointed by that, but that's double-digit growth still. It's not your 30 to 50%, but still substantial. And here, let's look at some of the metrics for Airbnb, some of the numbers. Let's dig into that and see where the company is placed at the moment. The market cap and enterprise value there, market cap of 98.7 at the moment, enterprise value of 87.8. We can see that the debt to equity there is a really good ratio, 0.25. That's nothing to be concerned about. Warren Buffett has said before he likes to look for nothing over 0.5. 0.25 is fine there. There's a lot of green here, I must say. GuruFocus actually says that the stock is modestly undervalued. That's their website calculation. You're going to take that with a grain of salt. You've got to look at it yourself, look through the numbers yourself. This is automated, but it's saying here GF value of 180. It's currently 151, so modestly undervalued there according to them. And the profitability ranks interesting here. Look at this, gross margin of 82.67, really good gross margin. Operating margin of 23.43, net margin of 56.87. These figures are just for the past 12 months, and this won't include the current figures. They're not in the system yet here. So FCF margin 44, and return on investment here, these figures, return on equity 89 and return on invested capital 89, return on capital employed 33. That's really good to see. That's really interesting. So this makes me actually be pretty interested in Airbnb. Oftentimes you look at these and the numbers are pretty bad. And this is about capital allocation and using the money, capital employed, putting the money back into the business and what they make from it. This is high. This is more than double the average for the S&P for return on capital employed there. So that's really good to see. That's very interesting to me. But we look here, down here, we can see the value rank. At this snapshot, the PE ratio is 18, just over 18.5, and the forward PE ratio is 33.78. This is before this current earnings, of course. Price to sales ratio is nearly 11. The numbers there are kind of on the expensive side. And price to free cash flow 24.5. This is before the earnings, of course. Enterprise value to EBIT is 31, which would be kind of on the expensive side, but it depends on the growth. So let's dive a little bit deeper just quickly here. This is the first time I've looked at it to see if I'd be interested in diving in, and so far, yes, it kind of is pretty interesting to me. So the 5-year revenue growth rate of 18.4%, 1 year of 19, this is before the current earnings. These numbers have been turning strongly positive from 2022. If we look at 2020, that was the pandemic year where nobody was traveling. People were literally locked down in their homes, and it was deeply negative there, but recovering well. And these are really positive numbers, starting to be really positive. It's going to be interesting to see if this keeps up, or it's an anomaly, or is it turning strong and it'll stay strong. Return on capital employed 33 and 26 for 2022. Those are really good numbers, and they're buying back shares as well. So this is kind of interesting to dig more into, I think. And of course, the gross margin, very good. Operating margin increasing there. It was negative there, and it's turned positive again. It was 9 to 22. Trading 12 months, 23. Seems to be, doing pretty well. So this is interesting to me, even though it's a big company. I usually look at smaller companies, so it's not so interesting from that point of view, but still, it's kind of impressive. It's kind of impressive. So revenue, we can see the revenue growth over time. Let me just flick to year-on-year growth. We can see there over time, it's fairly impressive revenue growth over time. Cash and cash equivalents, plenty of cash going on there. Of course, they're buying back. So there we have it. After looking at Airbnb for the first time, really looking at the metrics, this company is pretty interesting to me. I would be keen to dive deeper into this if I were looking at bigger cap companies. I look mostly at small cap companies there, but figures are looking good and everything is growing. And the capital allocation, well, we'll see buying back shares. If they buy back expensively, say it went up and they kept buying back shares, that wouldn't be such a good thing. If they can show that and they can keep reinvesting the way that they have started to, this company seems to be really interesting to me, and they are generating a lot of cash, expanding. So it's a bit of a thumbs up for me on diving deeper into Airbnb. Now, from what we've seen here, what do you think of Airbnb? Let me know in the comments. Is it something that you'd want to dive deeper into? Are you an investor already? What do you think of it? What do you think of the latest earnings? Let me know in the comments. Now, if you don't know yet, I've started the Art of Value Patreon. It's just the price of a cup of coffee each month. For that, I'll have exclusive videos, exclusive posts, other stocks that I'm interested in, stocks that I actually own. Don't own Airbnb. So I'll put a link in the description if you want to go and check that out, and see you over there. Now, if you're watching this on YouTube, I'm going to put a video here of what YouTube thinks that you in particular should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening, and I'll see you in the next one.